Today, I will show you a strategy that buys a short-term breakout, but holds it for a longer period of time. This allows us to capture an emerging trend that may gradually take off and grow over a longer period of time. If the breakout is not confirmed, we will exit after a while with a small loss. You can see the breakout zones on the chart. We enter when the highest price in the last 5 days is broken. The exit level, on the other hand, is determined by the lowest low in the last 20 days. For example, here we would buy when the breakout occurs, and here we would exit. Then re-enter here and sell here, and so on and so forth. This gives us a chance to capture a longer trend from its beginning to its end. Now let's set it up in AlgoCloud. Open AlgoCloud and first try the strategy on an ETF. I will switch trading so that both entries and exits are on bar close. I will add a condition for entry. The current close must be higher than the highest high in the last 5 days. For exit, I will set the opposite logic. I will close the position if the close falls below the lowest low in the last 20 days. The close is lower than lowest volume over a specific period, computed from low time period 20. Check that everything is correct. Entry on a breakout of the high, exit on a breakout of the low. When it comes to market right now, I want to test it on QQQ.D ETF, for example. Once I choose the market, I run a backtest, and you can see that there is something. We can try to filter it by trend. I can add the condition that the current close must be above the moving average for a certain period. Again, once I set this condition, I run a full backtest and I have to wait. Now let's try to convert this to the nasdaq 100 as a stock picking strategy. So we have to switch to stock picker, then leave the other conditions the same, and in the position score tab, we set that we want to trade 10 positions at the same time without shorts. For position score, we set the RSI for the last 5 days, which is subtract from 100, because position score selects the highest values. By subtracting, we reverse the logic, so high score equals to low RSI. Now set the market to nasdaq 100 and run the backtest. The results look good. You can see a good curve, 1,700 trades. You can also try adding a condition so that the strategy only trades in an uptrend. How? Simply using the multiple charts configuration, you set the filter to ETF QQQ. And you will only take trades if QQQ is in an uptrend. Let's test it. In this case, however, the filter did not help. We have a smaller drawdown and fewer trades, but the equity curve looks a bit weird to me. So for me, it's removing the filter. Now let's try a volatility filter. I will add a condition that the normalized ADR for the last 10 days must be higher than the normalized ADR for 100 days. In other words, the NATR for 10 days must be higher than the NATR for 100 days. Let's test it. And you can see an improvement. The profit has increased and the drawdown has decreased to 15%. Let's try the opposite variant, when volatility is lower. This gives us an even better result, a drawdown of around 9%, which is great. If you like this demonstration and you would like to see some more, give us a like and a follow.